So the stock market and the crypto markets are in a very interesting spot right now. And the Fed is about to cut rates for the first time since March of 2020. There are people claiming that this is going to be the top of the stock market, others claiming this is the beginning of a massive bull run because interest rate cuts are typically a bullish sign. And then of course in relation to the crypto markets, Bitcoin is chopping around close to all-time highs. Some think it's a bull flag, others think that we're going back down to test 40,000. But the reality is a lot of crypto traders and investors are feeling fatigue. They just want to see a move happen in one direction or another. So there's a lot of feeling and emotion going on in the markets, but let's try and dive deeper into this and use data points to come up with a better reasoning for what's going to happen. We'll keep this as short and concise as possible. Stick with me. So starting off with a very interesting data point that I found in relation to unemployment. Since 1950, we have never seen 4 consecutive monthly increases in the unemployment rate without there being a recession. Now it's funny because recessions are almost always called in hindsight, but instead of saying I told you so 10 months after the fact, let's try and find out if the recession is actually here. So if we use this data point and then look back at the unemployment rate for the last 4 months, we can see that we've had a consecutive increase in unemployment for the last 4 months. Not to mention, we just had a revision of unemployment. So there were actually 1.1 million fewer jobs added to the economy than the current administration cared to admit. As I said before, there is a lot of talk about the Fed cutting interest rates. The next FOMC meeting is in 19 days, and currently we have a 67% chance of a 25 basis point cut and a 32% chance of a 50 basis point cut. So what does that mean for the actual market as a whole? As I said, there's a lot of contradictory information going on online. An indicator that a lot of analysts use to determine whether there's a recession and whether the stock market is going to drop comes from the 10-year versus 2-year bonds. This chart obviously indicates a ratio between the two of them, which one is paying more, which one is paying less. And if you look, every time this chart inverts and the 10-year finally starts paying more than the 2-year as it should, and the last 2 times this has happened after a rate cut cycle, we have seen a drop in the markets. This was 2000 and this was 2007. Obviously, you see we had a big drop in 2000 and a big drop in 2007. This was after the Fed cut rates in a tightening cycle like we are currently in. And obviously, at the same time, we had this uninversion of the 10-year versus the 2-year. This was in 2000 and this was in 2007. And right now is where we're at, again, uninverting the yield curve. The 10-year is finally going to start paying more than the 2-year. Now, of course, I've seen this chart going around X a lot as well regarding rate cut cycles, and they return 12 months after the first rate cut. And a lot of the times they are positive, so that is good news. Now, not every cycle is the same, but again, 12 months after the first rate cut, you do see significant returns, so it would be a benefit to you to potentially hold cash, maybe invest your money in things like bonds. TLT is something that we've been calling in the Discord as well. And AGG is a big one. Lastly, guys, I know a lot of people are talking about Bitcoin, so what is going on? So right now we're consolidating on the weekly chart, and it looks like this massive bull flag is forming on the weekly. Now, it's also important to mention that on the daily chart, we are balancing a daily fair value gap. We inversed it, we retested it, and now we're retesting it again. So ideally, we want this daily fair value gap to hold to push us higher. But what do we know about historical trends for Bitcoin in relation to how it performs during election years? If we look at how Bitcoin performed in the last quarter of the year during an election year, but typically we saw a consolidation during the election and then a breakout afterwards. But let's look at 2012, 2016, and 2020 on the charts. If we look at Bitcoin in 2012, we had this period of consolidation. August through September, October, and November, we had a relatively consolidated period, not pushing past all-time highs, and then we had a massive run starting in mid-December to early January. In 2016, we had a all-time high made in June and consolidation slash downtrend all the way up until August and September. And then we had a massive push in October and November to new all-time highs. And somewhat of a similar chart to what we have now, but not quite. In 2020, before the elections, we had this downtrend with an all-time high not being hit yet, and then a consolidation and a push to new all-time highs after that. So now in present day 2024, we have a similar consolidation type move with our all-time highs not being taken just yet. Elections coming up. So my thinking is that based on past data, that after the elections are over and all the consolidation in the stock market and the crypto markets are done, we should, in theory, have a big push on Bitcoin. Let's see what happens. I'm not a fortune teller, like I said again, but I can only use past data to predict future outcomes, and that's the best that I can do with the information that I have. If you guys have any questions, please let me know what you think in the comments below. Do you think Bitcoin is going to pump? Do you think the stock market is going to pump? Are you hedging your portfolios? What are you doing in this market volatility to take care of your portfolios and ensure that you are making returns? And that is it, guys. I wish you guys the best of luck with your trading, and thank you so much for listening.